Analyzer gives you the visibility of your borrower's financial know-how. GSTR Analyzer analyzes the raw data available on GSTN server and gives insights on the various sale and purchase transactions to the lender. Digital lending software platform originates loans and is powered by Scoreme APIs for determining loan eligibility using analysis across financial statements. Credit monitoring highly flexible and scalable software, enabling the lender to analyze large volumes of data as per requirements. Scoreme, a leading fintech company in India. Get in touch to know more.
Scoreme Solutions and Resurgent India presents Virtual Session on Virtual Lending, Managing Risks, Accelerating Financial Inclusion. Mr. K.K. Gupta, Director, Resurgent India Limited. Mr. K.K. Gupta is currently associated with Resurgent India Limited as Director, handling all kind of financials worries of the clients. Core competence in the field of corporate finance and management consultancy, and believes in providing complete and hassle-free solutions to the clients at Resurgent India. It is a knowledge-oriented, full-service investment bank and financial consultancy firm that provides service in area of debt, equity and transaction advisory. Mr. Timmana Gowda D., Founder and CEO, What's Loan? Timmana, a mortgage and retail banker with more than 20 years of experience specialized in consumer loans. He has worked with Axis Bank in retail consumer loans across all functions for nearly a decade, handling business, credit, product at regional, zonal, and national level. Prior to this, he has worked in investment banking, corporate banking, consumer loans and housing loans. Mr. Vanshit Malhotra, Head, Security and Compliance, Jupiter. Vanshit Malhotra has been a cybersecurity researcher for more than 9 years and possesses knowledge in all aspects of IT security testing and implementation, with expertise in solution building for large organizations, managing cross-cultural teams and planning and execution of security needs beyond national boundaries. He is a cybersecurity specialist, passionate about hacking, more for the intellectual challenge, curiosity and adventure. Mr. Pramod Kathuria, Founder and CEO, EasyLoan. Pramod Kathuria is the founder and CEO of EasyLoan, India's first digital home loan marketplace. A seasoned professional, Pramod is on a quest to bridge the existing gap in the home loan market by building a technology-based, customer-centric and innovative solution. In his current position, Pramod is responsible for charting the company's business roadmap and overseeing the expansion and fundraising. Mr. Avinash Jha, Senior Vice President, Knight Fintech. Avinash is a distinguished expert in the fintech industry with over 15 years of experience. He currently serves as the Senior Vice President and heads the Institutional Sales, Alliances and Strategy team at Knight Fintech, where he oversees the sales of Knight Fintech in both India and international markets. He is a visionary and innovative leader with a proven track record of developing and executing successful sales strategies for institutions.
Good evening, friends. I am your host, K.K. Gupta here. So at the outset, I express our gratitude on behalf of the Resurgent India, who is a merchant banker, who is investment banker, and also debt syndicators. So we are very happy to note that more than 1,200 registration is with us. So we are thankful to the participants for every time they giving us somewhat encouragement to hold such webinars. So we are having, as you've seen, the wide profile of our 4 eminent speakers in different fields of expertise. And we're talking about the fintech company or talking about the housing loan, home loans, and other credit facilities. So today's topic is most important topic of the virtual lending, managing risk, accelerating financial inclusion. So financial inclusions is a cornerstone for striving the progress economy, ensuring that individual and business from all walks of life should have accessibility. Whether we are talking about affordable or we are talking about the appropriate, timely financial products and services like banking, loan, equity, and insurance product. This is financial inclusion, what we are talking about. Today we are talking about the virtual lending and how to manage the risk. That is the major topic for the day. And we are, as you have been told, that we are eminent speakers. We are going to talk in a different aspect. Because digital lending plays a very important role for the paperless banking. So you know that the our SME sector or a macro or a small borrowers could not have the balance sheet or their financial statement with them. So for a banker, it is very difficult to process the applications. By having a digital lending, the different sources are available. Whether we are talking of the GST or for an exporter, we are custom informations are available. From that, even a bank statement, the bank can fetch the total debit credit and transaction value. Even the balance sheet and profit and loss can be dropped out of the account statement. These are the different actually. It also some risk factors also involved in that we are going to discuss in detail. At the outset, I welcome all my eminent speakers and all my participants, who are more than, I think, will be 1,000 participants. And this is beside the electron media, you're talking about the YouTube or you're talking about other informations. Now I'm coming to Shri Pramod Kathoria, sir, who is expert, who is a founder and CEO of Age Loan. Moreover, he had done more than, sorry for that, 5,000 loan under the digital lending systems. So from Mr. Kathoria, I want to know from you, what are the products, how you assess the proposal under a housing loan to a digital banking, what we are talking about. And what do you feel end-to-end solution for the digital lending solutions? What is solution in your mind? Although you had done everything, whether the documentation, other thing has been also be computerized for digital lending without visiting your office, whether all the formality can be completed. And what you envisage to help the home loan people so that expedite sanction can be available. So I hand over to Mr. Kathoria for his well thoughts. Mr. Kathoria, sir, please.
Good evening, Mr. Gupta. Good evening, all the panelists. Nice to be here. And very well laid out, Mr. Gupta, by you, the context on, as you talk about the potential of digital lending in an economy like ours. And then you have various products which are very diverse in nature. Then you have a very different customer base, right from SME to corporate to retail. And then you have a broken or integrated, as the case may be, channels to service, discover these customers. Coming quickly to the direction that you put for me, and then I look at it in two ways. One is overall, how do we see the ecosystem on the mortgage digital lending side? Given that mortgage is not a regular loan, the lending requires a lot more in-depth understanding of the instrument, it's a secured lending. So obviously there is an asset at the end of the day. So it's beyond the customer and the behavior pattern financially that one has to read into on the customer. It's also to do assessment of the, secured lending or the asset in this case. So essentially, you have three players in the entire ecosystem. You have one marketplace that could be online, offline, and we will focus a little more on the online piece. Then we have the lender set, and again, there is a diversity in terms of their behavior on the digital part. Fortunately, there is huge stride and a lot of steps taken in digitizing some part of it, if not all part of it, but there's a lot more to be done. And Timanna will, I remember connecting with him some time back, and their thoughts and how this can be done. And then obviously you have various service providers who are enabling innovation, who are trying to bring in the latest technology or the focus technology that may be used, which may not be the domain expertise from the lender side or from the the marketplace side. So Mr. Gupta, as I was talking about, we have marketplaces. The online marketplaces need to do little more than what they are doing at this point in time. You have on the outside mortgage bastion, a lot of marketplaces who are doing end-to-end front ending of the customer, right from discovery to be able to process documentation application in a meaningful way, which is ready for a straight-through process in the lender base, and there could be credit calls taken based on that information. So as we move into slightly more complex product and higher requirement of a data set, I think that's where we give up as a marketplace, and there's a lot of body of work which is required to be done, not just limited to discovery of a customer, and discovery of the customer in true sense to be digital, which means that if there is a hybrid model of offline and online, then you end up spending cost both on the online and offline. So the commerce really and the I would say the value remains in discovering either the customer completely offline or online. The moment you have an online and offline mix, the cost of acquisition typically goes little up. So that's one part. So marketplace need to become little more in depth. What they've done, say, on the insurance side is incredible work. It is not only discovery, there's a meaningful ability to service and understand the requirement, also bring it to almost servicing or service it also. That same thing has to happen across the other product on the asset side, particularly in mortgages. Coming to the lender side, I think there's a lot more to be done, barring from the top 20% of the lender who have built infrastructure to be able to read into the digital footprint and analysis of the customer, and yet not doing fully digital lending, but can do digital lending there by sort of building that infrastructure and bringing it to play, really creating a sandbox for cases if required to be, and may start with a set of salaried or non-salaried. I mean, create a sandbox with a certain score, certain requirements, or for a certain property set, and start doing it. But I think, what we see from the lender side, there is an infrastructure created to be able to assess a customer digitally, but yet not complete the entire call on credit appraisal, given that there is an asset and that asset property, those documents remain to be physical in nature. So I think that's where we see a gap which needs to be built up. And on the services side, we see repeated multiple agencies working and probably providing the similar piece. We need a lot more work there. and innovation, and I would say courage to be able to call out few cases which are potentially still being done. Say, for example, the property piece remains completely physical in nature. If that can be picked up and meaningful work can be done on digitalizing that and pushing it across the lending set to be accepted. Then you have the legal and the technical, which is still physical in nature. Can it be digitalized? And I think there is a lot of work which is done, but still not been accepted fully from the lender set. I think so. This is where we see great opportunity. We see great stride from the top lender set. We see marketplaces which are doing online good work, but they're also hybriding it with the offline. So they're not in true sense online, and they need to be full stack in the sense, they need to be across digital landscape from mobile to website and so on and so forth. So they all need to come together there. So that's what we see. To answer your first question, that's how we see the ecosystem. Our ability to be able to do 5,000, in terms of value, and over the last 2.5 years has essentially come from the fact that we see a lot of appetite from the banks wanting to do it digitally. But I would also say there is a lot of pain and there is a lot of effort which goes in convincing some of these lenders to come on the digital platform. Also, the fact that you are bringing customers, making them ready for the digital experience. So there's some work which is already done, but there's a lot of work, I would say, still to go in to make it completely digital. So yeah, I mean, that's my 2 bits on this, and I can cover more, but I think I'll leave it, pass it back to you for.
Thank you, Mr. Kathuria. I think you have done a very remarkable work during last 7 months. What you are mentioning to us, there are more than 5,000 applications were processed under the home loan, under this technology platforms. So have any difficulty to collect the information, or the party are putting directly on the system, and you are assessing entire paperless banking? That is my question. Whether it is a paperless, all information you got on the system.
Yeah. So, Mr. Gupta, so I look at this entire process now that is specific to us in 3 pieces. First is the front end part of it, where you have the discovery of the customer and bringing the customer, collecting all the information. Then you have the banking piece or the lender piece, where you take a call on a customer, decide as to how much you want to give and so on and so forth. And then you have the payment part of it, wherein you actually making the disbursement and collecting the EMI digitally and so on and so forth. So barring 1 or 2 pieces which remain physical in nature, I think we've been able to do, along with support from our lender set as well as from the borrower set, a lot of it digitally. So we are able to compress the whole front end into a digital format, wherein we discover a customer online, we're able to complete the documentation online. Are there challenges? Yeah, there are challenges, because there is always this one document that a customer wants to send it outside from in a different format. But I think that's where you're pushing the behavior to come in line, because if you really want to have a robust digital experience, then you want to also create incentive for a customer to remain on the digital platform and complete the documentation. So the front end is largely handled. When it comes to flowing this set of information to the lender and basis this information for a lender to give a loan, that's where we see a little challenge, because the lender wants to probably repeat few steps, even if they come from authorized sources, or you have lender systems which are not ready for a digital experience. So that's where you will have a lender still calling for a document which is physical in nature. So we see a little gap there. And when it comes to the closing part of it, given that mortgage is a secured product, you still have a physical agreement which is exchanged, and there is a signing required and so on and so forth. So and I'm calling it out 3 important parts which remain physical. One is the handover of physical document to the bank. The second is the technical, and the third is the legal valuation that happens physically in nature. If this information can be brought in under the digital platform umbrella, I think it remains pretty much digital. The disbursement of loan happens digitally. The EMIs come digitally by and large. Yes, there is some scope, but that's more manageable, or that's, I think, evolving. But I mean, this is one piece on the physical documentation that we still need to solve.
Actually, now Kathuria sir, on the order of the day, we are talking in all platforms about digital lending, where we are talking about the paperless banking. And without even asking the party to submit any paper, you can process the proposal. Even for exporter also, they are talking about the bill of lading, other things should also be computerized, and documentation should also be computerized. And what do you feel as a digitalization future in India, so that we can compete with other countries? You must be knowing that about 70 countries already executed one agreement where they are telling all such should be a computerized, and you can say all documentation will be put on the digital platform. So what do you feel for India, whether how we can go ahead with these digitalizations for that?
I think there's a great and the greatest opportunity remains in our country. If there is anything, if the financial behavior is anything to look at, whether it is the acceptance of mobile banking, internet banking, people taking financial products, right from investment product, mutual fund, banking solutions, to insurance, to personal loan, and so on and so forth, credit card, various other consumer services, right from booking to flights to shopping, which is e-commerce, right from and then ordering online and so on and so forth. Anything to look at. I think what stands out is that the customer is ready. In this case, the customer is more ready, more more accessible on the digital platform that I would say most of the countries. As you look at it, the infrastructure in some of the countries, particularly say in US, China, South Asia, all this would be much stronger. However, the customer percentage terms, the ingress of mobile and internet is far overreaching in India. The customer is ready. So the potential is very high. Now one will have to solve the problem or the given understanding, a given habit of how the security or the secure lending was done in India. And I think while there are inroads, including what the finance minister mentioned for DigiLocker recently in the last, budget, all this is going in that direction. Can it be sort of expedited? Yes, a lot of it can be done. There should be incentive. There should be belief that the account aggregator framework should be able to resolve the physical nature of government registration data and that accessibility. And if the RBI is going to continue to insist on both the digital and the physical, I think that's where you'll have to have a bit of regulatory evolution in this direction. That said, I think customer is there. Most tech-wise, we are like Timanna was saying earlier, that we are the backbone to the world when it comes to tech. So we are creating it for the world. We obviously are creating it for India. I think the regulatory environment need to sort of test it slightly more and be able to release it in a fashion, at least, if not for all, at least for some parts of it, so that it is tested.
Thank you, Mr. Kathuria. I think you are excellently covered, and your practical experience, I think, will be useful to our listeners who are listening to you regarding this platform. I will come back to you. So I'm coming to Shri Timanna Gowda D, founder, CEO of What's Loan. Sir, we are feeling, sir, for this technology, or you can say digital lending, there are some challenges. Major challenges are there in process of integrating open banking, or we're talking about the API. Have any view on that? What are the challenges are there for the digital lending? Sir, please, sir. Sir, unmute kar lijiye, please. You unmute yourself.
Sorry.
Please.
Thanks, Gupta, and thanks, Pramod. I think you've covered very well on the most complex product in consumer finance, that is home loans.
Sir.
It's got person, it's got assets, it's got transaction, it's got mortgages, it's got tons of it. I'm a mortgage banker, so I can confidently say what he's covered is very well.
Very nice, sir.
So when we talk about I've been a B2B fintech company. I've been working with Gramina banks, big, large public sector banks, private banks, NBFCs, HFCs, and all that. What we see is what is built in the last 20, 30 years, if not 40 years, a technology from 2000 onwards, or what has been built is built for the provider, built for the lender. We listened to them and built. We had the technology, they had the knowledge, right? So it was not built for the channels like Pramod, who's the marketplace today. It was never built for the consumer. We never listened to him. There was no feedback loop there, right? Hence, it ended up being, core banking systems, loan management systems, loan origination systems, all data in, data out, upload, download, read, verify. We had tons of, agents available at the least cost in India to do all of that work. And I'm party to it. I've enjoyed having this support. When we looked at how do we build, when the DigiLocker was happening, Aadhaar was stable, a lot of digital infrastructure was built by the government faster than anywhere else in the world and faster than you can ever consume by the banking system. Yes, when you say, digital virtual lending, okay, let me call it as digital lending or online lending than virtual lending, because money should never become virtual. It has to come back, real. When it comes back, then only it becomes real. So I would say financial inclusion in that, if you talk about, what has happened is financial inclusion has remained as keep the poor kind of stance. It is consumed by the government DBTs, like payment level. But it's not going into credit inclusion. It's not going to wealth inclusion, or as Pramod says, asset inclusion. Asset inclusion, what is it? Recognize the asset, attach that to the person, and quickly verify digitally. It is available. Like most of the land records under DIL, Digital Land Record Program, have gone live. 98% of the land records are live on digital land records. But government has not given the open APIs there. We have been struggling talking to the state governments and central governments, Agri Ministry, Ministry of Electronics. Last 3 years I have spent on this. But luckily, it's coming slowly opening. What we're saying is, neo-banking is very simple. Opening a bank account, the bank will run the thing, but you only give the front-end layer, that is onboarding and, a little bit of account handling. But when it comes to credit, you are giving the money out. You have to assess the customer, assess the situation, assess the employment, income, and assets, transaction proof, all of that. So all of that is available electronically, digitally, but it is not openly available as APIs, open APIs where you can consume. And even if they're open APIs, they're not in the consumable format, I think, which others can cover better. And every time without even going there, without innovating, government feels that there is a security issue. For example, when I tell the commissions of the state governments who are e-governance commissioner, sir, land data is not private. It is a public data. It's a registry. Please give it to me. They said, no, unless you have the formal consent, digital consent, I can't give it to you, right? So is the farmer enabled, or is he aware that how to give a digital consent? No. Even today, if you look at the DigiLocker, 10-12% is the adoption. Why is that? Because you're kept on password or a OTP. So because of that, I've been telling, if you are dealing with regulated entities, if they are using for a purpose, they have a physical and digital consent, allow them to consume the data. They're not allowing. I mean, these are the constraints which we have faced. And we have to move from, we've been selling products. I've been selling products, loan products and financial service products. We have to move into buying the needs of the consumer. When you want to buy the needs of the consumers, then only will empower the consumer. Now today, what even Pramod was talking about, engaging with the consumer. You have to engage with him. You have to understand his need faster than he can even ask. You should not ask for a loan. You should not apply for a loan. You should not log in a loan file today. That is the, I think, idealistic situation. But we are getting there faster than other countries, as I know. And only the big banks have to cooperate. They are still on the LMS, LOS, and core banking systems, which are at least 10-year-old and dated. So I'll stop there. I think I'll ask others to contribute. Yeah.
Yes, sir, this is a major issue. What you're talking about, you also work in a corporate banking. You feel that digital banking will replace the assets-based lending? What do you feel as a corporate banker? I think you are a banker also. Once the digital lending will come, it can be replaced by assets lending or balance sheet lending. It can be
So far, sir,
beneficial.
see, digital lending will cover primarily, like payment went very fast because
Sure.
it's very simple transaction. There is a KYC, there is a transaction. Giver and taker, there are to and fro, right? And you have to, if something goes wrong, you have to protect that, right? In lending, if it is schematic, if it is a formula based, it is easy to do digital. When you get to mid corporate and large corporate, where a lot of your subjective assessments, you're meeting the customer, like your appraisal systems, which are physical, not digital yet. You have to meet them and then capture that and put through the 6, 7, 8 up to committee board level for an approval. None of the board members are ready to take a ping on their phone. Okay, look up your appraisal and approve it on the phone. And they said, no, I want to come to office. I want my secretary to put it up to me. I want to take a pen and sign there, right? Then you may upload that paper, but you are signing physically. So I think we should focus on the schematic lending that is mostly consumer. Agri, which is suffering. Actually, Agri is especially Kisan credit cards and all that. And then MSME, up to say about 5 crore, we can lend schematic. Account aggregator will help. IT returns which are coming online will help. Your GST will help. The bank statements will. All of that. All of the data will help. Beyond that, when you do subjective assessment and visits and credit inspections and all that, and as well as asset inspection, you will have to enable those channels. You can't totally go digital. You can digitize them, but you can't be digital direct there. This is the difference.
What is future? What you're feeling about that? Today, what you're talking about, 5 crore, something like that. Lekin future is something different, sir. Because all the, even you must be knowing that about 70 countries which I mentioned already have digitalized the positions. So if it will be order of the day, India will have to fall in line the same directions. Even for export or import, something all will be digitalized. Even bill of lading going to be digitalized. So future, how you see the future?
Yeah, see, primarily there are formats. Like, for example, if you're going to the supply chain finance, what is an invoice? Today we have digital invoices. You have to go digital invoice if you are above a certain turnovers, right? There is a good starting point for recognizing a digital invoice, which will never go wrong, right? Then there is a waybill. You can capture, did the goods move from A point to B point, right? Can I capture if the truck has moved through the toll plazas? There is you have but that data is not available to me. Give it to me and then I'll show you how it can be changed, right? So, okay, for example, real estate. Real estate is still in the sale deed format. Why don't we dematerialize the whole sale deed system? There will be custodians, bank hosted custodians, regulated custodians like your stocks, which are dematerialized way back in 1990. If 2025 can see dematerialized real estate, then first is you have to recognize the title. Then, today, recently you would have heard about, under IT Act, there was a provision that you cannot sign a mortgage agreement or sale deed digitally. That has been removed. Now state governments have to pick it up and make it under Evidence Act or Contracts Act that you can digitally sign.
You can do it.
Yeah, now you can do it, but now state governments have to pick it up. If you do all of that, then the total infrastructure ready. We are maybe slightly behind China, but way ahead of Europe and US and everybody. It's just that banks are not consuming what is available out there. They're very slow to adopt.
Sir. Very nice, sir. We'll come back to you, sir. I think you have touched very right point.
Thank you.
How it can be applied. I thought you also cut some point 5 crore or something like that. It will be not far away when all position will be digitalized. I think now we are working on that direction only. Because all the fintech companies and the banker are jointly working together and to see that even co-lending, which we are going to discuss, is one of the aspects where everything is coming up very fast. Thank you, sir. So I will come back to you. Now coming to Mr. Malhotra, who is the Head of Security and Compliance, Jupiter. Mr. Malhotra, how you must have listened all the previous speakers. So how have a digital lending platform performed in terms of overcoming challenges of data security and privacy for the borrower? Because security is the most important information. All the information what they are passing on to the banker, to the even fintech company, how it can be privacy can be maintained, how it can be security can be maintained, how a borrower can be confident that the data will not pass on to other person. Have any view on Mr. Malhotra on that aspect, Mr. Malhotra?
Sure. Thank you for that question. I think that's a very valid point, given how stringent we see the laws and regulations coming up on data and privacy of Indian citizens, with RBI data localization and tokenization gaining a boom. As to the best of my knowledge, I think somewhere around September 2021, digital lending platforms in India were gaining a lot of popularity, right? And we were facing challenges in terms of data security and privacy of the borrowers, and there were a couple of things that were seen, going on a downside. However, I think it is very important to note that the landscape for digital lending has evolved since then, and so has the threat landscape for the data privacy has also. So, digital lending platforms in India typically collect a significant amount of personal and financial information from the borrowers to assess their credit worthiness and to facilitate the loan approvals, which is a very valid thing to do. Now, while these platforms, what I have seen, during various audits and various assessments, these platforms strive to ensure that the data security and privacy, has not been compromised. But there are certain things which I think these platforms can do in order to ensure the privacy of the borrowers. I think the very first thing that can be done here is to address the data protection measures that we can put in. So to address data security concerns, digital lending platforms can definitely go ahead and various measures such as robust encryption, secure data storage, access controls, and security audits. This way, they can actually aim to protect the borrower data and unauthorized access to these data breaches and cyber threats. The second and the most important thing that they can go ahead and do is to ensure they follow a proper regulatory framework. RBI itself has recognized the importance of data security and privacy in digital lending in India. And I think in 2020, they also released a guideline for digital lending platform to emphasize on the need of practice of the fairness, customer data privacy, and the grievance addressal mechanisms. So those are the practices that this digital lending platforms can adhere to. The next area, where we can focus to ensure the data privacy is to ensure we have the right data sharing practices. One of the challenges, which I think is the potential misuse or unauthorized sharing of the borrower data by any lending platform. That is the most highlighted part that we see. So data segregation and data misuse has to be prevented. So there have been instances, where borrowers' data was allegedly misused or shared with third party without proper consent. To address this, I think RBI has also emphasized on certain guidelines for explicit control of the borrower sharing data and a mandated transparency with the borrower data. Then I think there is consent and awareness, which come as a very, very important point, that we have to take the consent from the user, and the borrower has to be made aware of what this data will be used for and how it will be, what will be the life cycle of this data. Then I think collaboration with various credit bureaus can also come into the play, where the digital lending platforms, in India, often rely on different credit bureaus for the borrower data verification and scoring. Collaborating with reputable credit bureaus can definitely help to protect the borrower data, because the data is just shared by the credit bureau through a score, and no actual data is shared with the platform itself that can be, breached or misused or any ways. Yeah, and then I think there are the regulatory government of India efforts, which we see, the Personal Data Protection Bill of 2019, which is currently under the discussion in the Parliament, I think. Just to end and this conversation on my part, as a final note, I would say it's essential to stay updated on the latest developments on the Indian digital lending sector, and to be and everyone should have a more accurate understanding of how the digital lending platforms have performed in terms of security and privacy. So therefore, I recommend to, referring to such RBI reports and articles and stay updated on the regulatory, measures that RBI is recommending.
So you have the cyber security. I think you are the main speaker and you have published some article or something like that. See how is cyber security can be helpful for that. Because the data, once they're passed on the data to the fintech company or to the banker, how a borrower can be ensured that data will not be tampered or that data cannot be shared. Because these are the major issue. Have any regulator in this respect of RBI or something like that? They have some guidelines to protect such data, something like that.
Yes, absolutely. RBI has its own data privacy, personal data protection bill since 2019 under discussion. And like I said, instead of just taking the data from the user, lending platform can collaborate with the, credit bureaus, right? Now, these credit bureaus can share some data such as CIBIL score and everything. So that's one way. The second way is to do the personal due diligence by lending platforms, such as having the right encryption and storing the data and not misusing that data. The next thing comes as the regulatory laws that the Indian government has passed and also is in a process of passing more further laws on this, how the customers' data should be protected by even lending platforms or any banks for that matter, any fintech for that matter.
So my participants they are more interested of how their data can be protected or what is their right. If some data they are sharing with some other people, what action they can take against the, you can say, user of that data? Have some protection or anything?
Yes, absolutely. See, so whenever we share data with, let's say, a third party, there are certain legal formalities that we have to perform in order to have a an agreement with that person to ensure that they have some level of legal responsibility in case the data is leaked or misused in any sense. But and like you said, how they can protect the data. So the first step comes in when you're talking about credit bureaus, you are dealing with a lot of PII data, right? It's a personal data of a particular user. You are doing some KYCs and there's going to be a lot of documentation that is going to be submitted. That is where credit bureaus come in. So take data what is needed. And also one of the approaches that can be considered here is to only store something that is really required. If you don't require that data, destroy it. Don't keep it stored in a database for a future use or something. In case it is still required, have the right API level security, database infra security implemented in the infrastructure, so that even if a breach happens, then you have different layers of defense to protect the customer data.
Okay. Well, it can be, you can say, regulatory framework is there. If something is going against that, action can be initiated or you can take action against that also. That is the list of what you're talking about. Thank you, Mr. Mehta. I will come back to you. Now I'm coming to Mr. Jha, Amish Jha, who is a Senior Vice President, Knight Fintech Company. Mr. Jha is available? Mr. Jha,
yes, sir.
What are major issues that are there in co-lending between banks and NBFC, and how the this middle level platform can solve the issue? Because this co-lending aspect is coming in a big way. All the bankers are entering with the NBFC for a co-lending, 80-20 ratio. For
That's
digital lending, how it can be protected to the banks and to the borrowers. This is most important issue because the banks are lending by the NBFC and 80% are being shared by the banks for that. So major phase is NBFC. So how it is protected? How the digital lending will be helpful for co-lending is the first issue. And what are the challenging phase and how it can be protected? I think these are three issues for you. Please.
Sure. Thank you, Mr. Gupta, for having me over here. And I think this is a fantastic platform to share the views. Already all my participants the co-panelists has already discussed many insightful information about the co-lending and the challenges, the digital lending and the challenges. I would like to, as the question has been asked, I'd like to throw some light upon co-lending as well, whereby the challenges. So as we all will agree with the fact that this co-lending is a very new and in the nascent stage, whereby everyone is learning about it, everyone is trying to understand, because RBI is coming up every day with something new, so that they are trying to figure out how this can be settled. And same is the story with all the bankers and the NBFCs who are willingly doing the co-lending. So this concept itself is so very new, so it is introducing many challenges as well. So we being into this industry, and we came up with the co-lending middleware platform, and we happen to be fortunate enough to actually being helping more than 7 PSBs out of 12 in India who are using my platform today, who are using Knight Fintech platform. And from the experiences that we have received, since we are doing around 3,000 crore of disbursement every month on our platform, which is consisting of around 1 lakh of applications every month. So we figure out many challenges which are there in the market, and why, what are the issues that is coming across. So I can categorize these challenges into 4 categories. One would be the onboarding issue. So let's take an example that one bank would like to, create a big book size. It doesn't make sense for a bank to have a 1,000 crore or 5,000 crore disbursement and calling it as a successful co-lending model. They would like to have more than 1 lakh crore of business, and to do that, they will have to, onboard if not more, but then at least 50 NBFC partners. And having onboarding done of these 50 NBFC partners itself is the biggest challenge. Bank cannot expose their platform or their internal system to these NBFC partners. At the same time, it will take probably more than 6 months of time for each and every NBFC partner to be integrated on the bank system. So that is something which is a big issue. From the NBFC point of view as well, you will agree with me that each and every NBFC would like to have business with more than 1 or 2 or probably 3 banks, and then these banks would be expecting a particular format of data, and integration would be needed. So it's a chaotic thing. So I think the number 1 challenge which is there is the integrating these 2 bodies, and I think there is the biggest challenge. Challenge number 2, or the issue that I can see, number 2 would be is the management of the escrow accounts. So today, what is happening in an offline mode, majorly NBFCs are providing the split to the bank, and bank is totally dependent upon the split which is being provided by the NBFC. But then there is again a challenge whereby since NBFC is also not having a full information about what is happening inside the bank, what is the abbreviation logic used by the bank and all. So there is the issue whereby escrow management is a bigger concern. Third concern can be, or the issue that I have seen or we have observed is with respect to the reconciliation. Now, you would agree with me that both the entities are large enough. So these are, big banks, and also these NBFCs are some of the India's biggest NBFCs who have been doing this business from probably ages. And they have developed their own system for underwriting, they have their own LOS, LMS, their own way of accounting and all. Then marrying these 2 systems together and bringing them on a common platform is the biggest challenge. So reconciliation, the appropriation logics, the holiday calendars can be different. So there can be many other challenges in terms of accounting and reconciliation. I think that is the third major issue that we have seen. And fourth would be the CLM1. In CLM1, what happens? Co-lending module 1, whereby NBFC and bank would be co-originating. They will be underwriting at the same time. So imagine a situation whereby there is a borrower who is waiting who has approached the NBFCs and expecting the loan to be disbursed in, let's say, 1 or 2 a day or probably 5 days time, because that is the normal that any NBFC will take. Now there is this PSB bank. Now there is this public sector bank, or any bank for that matter. They might take more than probably 5 days or 10 days of time to do the underwriting, and this borrower is waiting. So not all will be sure that whether this borrower will be waiting for the bank also to give the approval, and that is the loss to the ecosystem. So in CLM1, what happens that bank will have to raise the bar whereby they will have to do the underwriting at the pace of what NBFC is doing. And there where they need to have a system which can support them and which can do this underwriting to that level. So we at Knight Fintech has come up with a solution whereby we are providing a middleware which can be deeply integrated, one side with the bank and other side with the NBFC. And all these challenges can very well easily be taken care through the platform itself. So, so this is talking about the challenges. And I think the second part of your question was talking about, the data analysis and how this technology can further improve the overall processes. So do you want me to take that question?
Please. The technology is more important is to what you're talking about, the difficulty, the underwriting of the party. I think it can be done. There is not a challenge, because once they enter into an agreement with the banker, 80-20 ratio, they should have a confidence with the NBFC. All data can be loaded on the system, and a predetermined agreement, they can process the proposal and sanction it or authorize it. That can be done. I think that is being done. Important issue is the technology. How it can be synchronized between the NBFC and the banker. So the same data can be loaded to the banks also, and they should also feel comfortable with the technology aspect or innovation aspect. I think that is the most important aspect in respect of the loan disbursement. And second aspect is the recovery of the loan, what you also talk about the reconciliation. And that is also most important issue. Once the NBFC receive the money, and they will have to distribute among the system. So system should automatically throw how much recovery they have taken and how much they have disbursed to the bank. I think the both way it should be very innovation, or you can say technology aspect should be there. I think that is a major issue in the co-lending aspects, on which any platform or any system, whether already developed or in force in the banking sector. Now co-lending already 2 or 3 years past. Now system must be settled. So have any view on that system, sir, Mr. Jha?
Yes. So certainly, as you mentioned, that recovery as well as the overall technology has to be sound enough to take care of all these aspects. I always speak in all my discussions that it is actually a wedding between the two people, a North Indian girl and a South Indian guy, and so the cultural differences would be there, and so on and so forth. And to make them to the same platform is a bigger challenge. But however, I can say that with technology, things are possible. With the technology, with the platform, things are easier. Just imagine doing a reconciliation, manually is not possible, because we are talking about a big chunk of data, and there where the technology comes into picture, whereby we will be able to support all such kind of transactions. So yes, it is helping. It is helping. The platform is helping the overall operation level issues, which is making the life of the operational people easier. And overall the demand is such whereby the volume which is expected is too big and too high. And to support to that, and technology should be there, evolved, and technology is helping the entire ecosystem. So I believe with respect to the overall expectation, so I can give an example of let's say an FLDG. So even with the FLDG, which has yesterday's good news, which has come into the market, so this is going to further increase the boom in the market about co-lending. In FLDG also, there are two players. One would be the originator, second would be the financer, and you have all these nitty-gritties comes into picture, whereby you have to actually do the precise underwriting. You will also agree with me, 2 months back, RBI has come with an article whereby they were talking about more scrutiny should be done because of seeing the overnight growth in co-lending from 5,000 crore disbursement in the last year to 25,000 crore this year. So they were talking about more scrutiny has to be done, and how these things can be achieved, how your regulator can be okay, how your the big banks will be okay with the overall growth. You need data analysis to be done properly, be it a bank statement analysis, financial statement analysis, ITR, GST. Your platform should be able to do all those things. And what I can see in future, there will be lots of even advanced level of analytics will come into picture, whereby a triangulation between a bank statement and an ITR and a GST will also come into picture, so that to give the comfort to the lender that even though it has been sourced by through the VC model, through the FLDG, or through the fintech model, but then all the data are there. You can do a thorough underwriting. The only thing we have to take into consideration are that and the quality of the underwriting, and all those things can be performed using these kind of platform and technology. I think that is where I think the future is very bright in terms of digital lending, of course, and with inclusion of FLDG and various initiatives that RBI is taking with respect to co-lending as well. This is going to be the future is very exciting, I can say.
Very nice, Mr. Jha. I think when we're finding out about 90%, we are in macro, you can say SME sector, which also not registered. For this co-lending, I feel they can see the light of the day, and they can be thinking that under co-lending, they will get some loan from the NBFC, which is a collaboration with the banking sector. I think future, what you have also mentioned, future is very bright for the co-lending, because this aspect has come up very nicely, and ventures are also supporting. Only major point is innovation and technology. Technology, as you are also rightly mentioned, reconciliation is very, very difficult. Manually now you cannot do anything. Even the banking sector, if you're talking about 20 years back or 30 years back, when they are doing all the interest, everything on manual, how much time it will take. Now with a press of button, you can apply total interest, everything, all reconciliation, other things can be done. I think that technology aspect for a co-lending, it must come. And already some co-lending, I know that they already implemented with the collaboration of the banking sector. I think this is the most important issue. If anything, Mr. Jha, you want to add in a co-lending, because you are expert for this system technology. Anything you want to add, or anything advise to the co-lender or to the bankers? Because some bankers are also in this meeting who are also listening to you, because they are also facing some problem. They are also talking to me, how the innovation can be implemented for that, how they can synchronize with the NBFC. Have any suggestion to these bankers? They are listening to you.
So primarily, if you ask me, so whenever we talk about co-lending, we always think about onboarding with bank, and bank always thinks about onboarding these many NBFCs. Let me tell you, this is only 10% of the problem statement. So do not look at co-lending as just how you are going to onboard, because onboarding is one-time problem. I understand it's a bigger problem. But yes, you might take 6 months of time, 7 months of time. Do not plan for that. That is something that you will figure out. We already know how to do integration, how to push the data, and that's the larger problem that comes into picture is you already covered, Mr. Gupta, is the recovery piece and also the reconciliation. I think if we are more focused about how we will do the reconciliation, I think your problem is solved. And to do the reconciliation, there has to be a total transparency between both the systems, and that is possible. So we have seen, we have been doing now reconciliation. So there was a theory, we used to say that reconciliation can be done. But then today, since we are there in the market, we have seen enough of data flowing onto the platform, and we have done successfully the reconciliation. I can say that, this is a time with the technology, co-lending is possible and it is happening. And with the platform, reconciliation, escrow management, and the recovery can easily be taken care. You just have to figure out which is the right kind of technology that you have to adopt to. But you can see most of the banks have now understood what to be done, and they have already examined and they have already reached to the conclusion that yes, this can be done. So again, conclusion is that co-lending is not about getting onboarded with the bank and disbursement. It is, the game starts post disbursement, because your loan can be a 20-year of loan. A housing loan can be of 20 years of loan, a TL can be of 5 years of loan, and the borrower can change at any point of time, right? So to take care of that thing, you need to have a strong accounting and reconciliation mechanism in place. So take care of that piece, the co-lending would be easier.
Thank you very much, Jhaji. I think we have covered very nicely. People must be
Thank you so much, sir.
listening to you regarding co-lending. I think this is a very order of the day, and every people are talking about the co-lending. So I'm coming to Mr. Timana sir. Timana sir, have any view on the lastly, have any suggestion to the participants, sir? Hello, Timana ji. Have any suggestion, lastly, any word for the participant, Mr.?
Yeah, see, we have moved on with the co-lending, digital lending and all that, but there is a lot behind the digital. Digital is just the interface. Digital is not the risk assessment, risk taking, or risk pricing and risk rating, right? The domain skills will still remain very strong. Technology people are not going to rule this world, and we should welcome the domain specialists from lending, banking, insurance and investments and all that. My take is last 3-4 years, domain is very, very important. We've exhausted, building just a product and looking for building a product and looking for a problem. Like now there are enough problems to build a product. Let's take a problem and build a product, not build a product and look for a problem, right? So to do that, you need to spend good amount of time with good banks, lenders, NBFCs, HFCs. Like, when RBI called out and guidelines in September, they showed you who is the boss, right? Lenders are the boss, banks are the boss. And fintechs have to work with the regulated entities. You cannot innovate outside regulations. Stay within the regulation. Anywhere in the world, whether it's a GDPR, anything, whether it's a data privacy, about lending overview of RBI, or the investment side of SEBI or insurance IRDA, you have to stay within. They can break you overnight if you break the regulation. Most importantly is data privacy and protection. You feel for the customer. Customer is the owner of the data. Whoever is handling the data is a glass in your hand. Handle it carefully. Don't drop it. For dropping, customer is not responsible. You are responsible. So I'm just saying the domain calls a shot. So now who is the boss and who is the boss of the boss? RBI is the boss of the boss, and regulated entities have shown their power. They know how to take risk. They have the balance sheet to take risk. Work with them, co-work with them, co-lend with them. Take a risk. But now yesterday's FLDG says 5%. That's quite a limitation. But again, the credit models will come from the lenders, not from the fintechs. So if you can build and show it and take the approval of the regulated entities who are recognized NBFCs, HFCs, MFIs, or banks by RBI, work with them closely. And they have tons of knowledge. Make use of that.
Regulatory are the boss. I agree with you. You have to follow the regulator. Otherwise, you will not survive. Now, Mr. Malhotra, have any last word, Mr. Malhotra, to participants? Your advice to them, Mr. Malhotra?
Yeah.
Yes,
So I think everyone covered a lot of issues and the challenges they face. From a security and compliance side, my only advice is to the panel is going to be to like always collaborate with the traditional banks and the regulated entities, like Timannaji just said, and be in that compliance boundaries and collaborate. Create a more powerful and sound ecosystem, like the other panelists said, and that is how Indian economy and the Indian fintech ecosystem grows. So, yeah, so great to be on this panel.
thank you. Thank you, Mr. Malhotra. And whether we are available, Mr. Kathuria, sir? Kathuria, sir, you are available? Mr. Kathuria? So lastly, I'm thankful to all my eminent speakers, I think, for this great discussion. So we could not get any question today. So either the people can understand the eminent speaker or they have no question. So we ask from the panelists. So I'm thankful to all the eminent speakers for that. I'm also thankful to my team, headed by Mr. Rohan, Mr. Chaudhary, Mr. Joginder, and Lokesh, who are off the screen. They are helping us to for this great webinar. Under the Resurgent India banner, we have done 185 webinars on a different series. As per the requirement of our participants, as per their suggestions, so we are mostly holding such webinar every week. Besides that, we are also getting a webinars or a, you can say, virtual or otherwise, online also, with some association like ASSOCHAM or PhD Chamber or the Indian Chamber of Commerce or CIA. Only yesterday we have done very important webinar for a trade lending with the ASSOCHAM. So a very successful webinar for that. So at the end, so we just want to tell you the research in India. We are a merchant banker, we are investment banker. We are also providing a loan syndications work. And we are also conducting technical viability study for mostly for all the banks in respect of credit facility. Besides that, we are also providing a, you can say, valuation as well as the block asset or enterprise value. Besides that, we are also in solvency. Most of the fields research in India, under the banner we are doing it. You can avail our services in any respect. If any suggestions from your side, for the participant side or from the speaker side, to hold any webinar which is useful for the participants, so we are ready to do that. I hope, because more than 1,200 registration was with us, so participant must be benefited today discussion in respect of virtual lending, managing risk, and accelerating the financial inclusion. Financial inclusion is the most important aspect, where we feel that accessibility and equality of opportunity available to all the people. I think that was our motto of the research in India. So we will try that whatever we can help the entrepreneurs, to the bankers, to the fintech company. So we are here. In every week we can do something. In the end, I'm thankful.
There's one question, sir. I think that we need to take that question. There is a question on floating rate, repo rate, and when the banks
There was no
increase.
question. Now
Yeah.
must be given. Must be
Yeah,
given.
there's one question in Q&A.
Now a question is there. How come no response? But I mean, now what is it? Ravi Swami has given last moment. 5:01 per he has given this question. After 5, I have no question with me. When you take a loan from NBFC on floating rate, when repo rate increase, they increase the interest with immediate effect. Good enough. But if the report rate decreases, they never give the benefit of the same. Legally, what can one do to bring this transparency in NBFC lender? Have anyone can give this reply? Or Mr. Jha, you are expert in NBFC. co-lending.
So we are not into doing the lending. I think a lender can give a
can give a
better
reply
response.
if any, but if
Yeah.
any eminent speaker want to give reply.
Yeah, I can take that. I can take that. See,
Please.
there has been a lot of transparency over last 2-3 years by RBI how to really work on a floating rate when you set it every quarter. I think you should write to the bank, and if they don't respond, you can write to the ombudsman that how your rate is not being transparent. And when you make a request to the bank, they generally do that. And I know it was not transparent, but I believe it is more transparent now, more to do with home loan floating rates, because RBI is very watchful of that. What is the marginal cost of lending, MPLR, or they've really aligned very well. There is nothing like legal in India. It takes long time. It should just write back to the institutions are very responsible. They are not going to deal with a small problem like this. They will listen to you, and you threaten to switch the loan. That's all. The switching is the best way to tell the lender, okay, listen to me.
I think this is a proper reply by co-speakers, or they are given very clearly. You can write to the banker, you can go to ombudsman also. Because I think there is no need, because bad it should be automatic. If your repo rate link any advance are taken away, so it should be automatic. When repo is increasing, definitely the loan amount will increase or the interest rate will increase. If it decreases, definitely it should be given effect. If they are not doing it, you can write to them, you can discuss with them. I think it can be materialized. If still they are not doing, there are so many agencies are there. Just like I told the ombudsman, you can go to ombudsman, you can go to RBI. I think there is no other question from to be replied. I'm thankful. I'm not talking about the banks. What addressing to NBFC? He is asking the NBFC. NBFC, you can also write to them.
Yeah,
NBFC,
both are under the same regulatory overview of
regulatory.
RBI. They don't treat differently. Both will be taken to task, if there is no transparency. This is exactly what the RBI is calling out. Be transparent in declaring, is it a floating rate or a fixed rate? Is it an annual? What is your annual rate? You have to disclose and make customer accept it. Customer can question when it's not done properly. Yes, you can go back to the NBFC as much as you can go back to a bank. There's no difference.
Customer are the king. Then you can write to them. You can go to them. You can approach the higher authorities. I think there is no problem at all. With this word, I am thankful to all my eminent speakers, and I am really obliged for sparing their time. And above all, I am also thankful to the participants who are giving every week. They are giving some time and also given us some question for that. Thank you very much. I close this.
Thank you, Gupta ji. Thank you, guys.
Thank you.
Thanks,
Thank you,
everyone.
everyone. Thank you so much.
leading fintech company in India. Scoreme Solutions, an innovative analytics software company in the fintech space. Our service offerings: Bank Statement Analyzer. Analyze prospective borrowers' bank statements to assess the creditworthiness and eligibility for loan. Financial Statement Analyzer.